Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition, Daily Market Commentary. I'm your host, Chuck Fulkerson. We are about to wrap up the week by taking a look at some potential opportunities as we go into the end of this trading week. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. If you are a regular viewer, do me a favor, leave a like, hit the thumbs up icon, means a lot. I appreciate it. Okay, let's get started with the S&P. Down 7 points this morning. Nasdaq's down 22, so a little bit of a sell-off. We did bounce a little bit on Wednesday. We talked on Wednesday's session. For those of you that joined us Wednesday, we talked about the fact that we were sitting right on a rising trend line, and we were coming down into an area where we potentially could see a bounce, and we got a pretty good bounce on Wednesday, but no follow-through day on Thursday. I really need to see a good follow-through day before I'm going to be, ready to jump at longs, and I don't have that follow-through day. Remember, we talked about the fact that you needed some sort of reversal candlestick pattern, and we didn't really get a strong reversal candlestick pattern. So that makes me very cautious heading into today. September is historically a pretty weak month for stocks, especially, as we've had such a strong year. And so I'm still going to be very cautious about anything that is really long today, because I don't have a lot of great demand below me to lean on. We bounced off of the daily level, but didn't get a big enough bounce to really have that sustained. And so the next thing that I'm going to look for is a breakdown below this 44.26 area. And if we break down below this 44.26 area with proper basing, then I think you've got room for price to drop down to this 43.86. That's really the best level, because that's the origin of a very strong move. So if you decide to take that, look for a breakdown below this 44.26. Now that's pretty far away from where price is today, right? That'd be price dropping another 30 points from where we are. And so I think that'd be difficult for that to happen today. If it does, that'd be a heck of a down day. But it certainly is something to keep an eye as we head into the weekend. Look for if you want to look for a potential short opportunity on a 15-minute chart, there is a little level that was formed in the overnights right here for a potential overnight short. And let's put that in purple because it's a 15-minute level. All right. Next, let's go to the NQ, looking here at the NASDAQ. If I look at the NASDAQ, very similar picture on our 4-hour time period. We are fairly sideways, not quite as weak as the S&P has been, still a little stronger than the S&P in general. On the daily chart, didn't get as deep of a pullback either. And so on the 1 hour, I have a little level down here, this unbalanced wick over wick where we could see a bit of a reversal. If I move that over to the 15-minute chart, we bounced off of this level right through here on Thursday, and there is a little area right here. But I wouldn't be surprised to see us get a little rally off of this area. So this 15,435, I think, would make for a pretty good level. Moving on to crude oil, taking a look at crude, we had our contract rollover. So looking at after our contract rollover that we had, we are a little bit of a gap area here in front of us on a 15-minute chart. But there's not a whole lot to lean on aside from this level here, the origin of this very strong move up, 71.43 by 71.31. That would be a little bit of sideways, very strong move. Also, a breakout above 73 would be a pretty good move, and that we're sitting right below this area of supply. Now, this supply area on a 4-hour chart has given us a little bit of a move away, but not a super strong one. So I think that if we get basing up in this region, we will see price pop through there and head to the next most obvious level of supply. So I think both of those levels work for potential long setups. And then last we have gold. Now in gold, we talked about a breakdown on Wednesday below this 1780 level. So hopefully you're able to take that ride with us. And if you missed out on that, then no big deal. You're going to get another shot, I think, at a retest. And there's two levels here on the retest. The first would be the origin of the breakdown, which was the basing immediately before the breakdown, which occurred right at the London Open, which is a really good time of the day to look for these areas, as you've got a limit entry in there. But then just after the breakout, you have a little confirmation entry sitting at 1777 by 1781. So those two become a little bit of a level on top of a level and a stacked area and stacked opportunity when we're talking about a potential pullback. Now, thinking about gold overall, the GC on a daily chart, if we think that it's going to continue to head down, another way that you could trade it would be to look at the GLD. And the GLD had a pretty strong gap down the other day, yesterday, but let's keep an eye on that one going forward, as you may get another move down in the GLD for those of you that trade those ETFs. So those are our four major markets for today. Let's take a real quick look at our stock of the day. And my stock of the day today is Target. And the reason I'm pulling up Target has been a pretty strong bullish performer for quite a while, but we've broken below a key trend line. Now, we put in a little bit of what could be considered a double bottom right there at 241. And so that, to me, is an area to look for a potential breakdown. If we break below that area, that would be where you've got a pretty strong breakdown trade setting itself up. Now, as I look at the hourly chart, we've rallied back up off of that double bottom, but been unable to put in a new higher swing high. And so the fact that we're unable to put in a new higher swing high as of yet tells me that there's a better chance we're gonna roll this over and come back down. Now, if we roll over and come back down, where do I see an intraday shorting opportunity that I could maybe take advantage of? And I think that this wick over wick level that you have right here might be that the catalyst for us to roll over and come back down. So look at this area for today as a level where we've got a potential short right up in here, or I think the better trade is obviously the breakdown below this 241.50 area with the proper amount of basing. So that's all I have for this week, everybody. Do me a favor, make sure that if you're going to hold something over the weekend, you understand how to hedge it. If you've got any questions on hedging, go to tradersarmy.com, learn a bit more. We've got some free videos on how to hedge futures over the weekend utilizing options on futures. I'll put the link to that video in the description down below. But that's all I have for today, everybody. Hope you guys have a great day. Remember to leave a like. Talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.